Okay, wanted to talk today about Zillow stock. If you followed me in the past, you know I've done a lot of talking about Zillow. I even back in, what was it, August of last year, made a substantial purchase of 1,000 shares of Zillow, and then at about $46 a share, and then proceeded to write it down to $26 a share, and then write it back up, and then back down again, and then back up. And it's now, I think, trading today at about $65, or actually Friday at $65 a share. So it's been up and down, and I wanted to take some time and give some perspective and give my feelings on what's happened.
Numbers have just hit. Let's get to them. Rahel Solomon has them for us. Rahel.
Hi, Will. Yeah, so it looks like it was a better than expected quarter. Let's start with revenue. That came in as a huge beat. So that came in at $944 million for the fourth quarter. The expectation had been $815 million. So it doesn't seem like EPS was provided, but it does appear that there was a smaller than expected adjusted EBITDA loss. And the press release just crossing the company saying that its consolidated quarterly revenue grew by 158%. Annual revenue grew by 106%, so that was driven by rapid expansion. The CEO and co-founder Rich Barton also saying that he would characterize 2019 as, quote, tumultuously remarkable.
Basically what's been moving Zillow stock is what started out as instant offers and then became offers, and now in their shareholders report they refer to it as homes, separating it from their premier agent and their website activity. Their homes segment of their business was up 2,507%. Substantial. Actually had revenues of $1.365 billion. That's pretty substantial. But showed a loss on that $1.365 billion of $312 million. On the other side, their mainstay business, their premier agent, was up 3%, and their rentals, which they do mostly through Trulia, was up 22%, but it's an insignificant part of their business. They are banking their business on homes. So what I wanted to figure out as a stockholder and as a real estate agent who's interested in what they're doing, what exactly they're trying to do, and how are they going to take this $312 million loss and turn it into a profit? How through scale are they going to turn this around? So what I did was go to their stockholders letter, I think it's called a K-10 form, and reviewed the numbers. And a retired financial advisor, I actually feel pretty comfortable with a profit and loss statement, and with a little bit of time I can make some sense out of it. So let's go take a look at it and see if we can make some sense of where they're going and what the future holds. Okay, the first thing I looked at was this report showing the 3 months ending and then the year end, and I concentrated on the year end. And here you can see for homes, the home segment, they did 52 million in 18 and took that to 1.365 billion in 19, and that's where the 2,507%. And there's the numbers I relayed to you about premier agents and rentals. And as you can then, if you drop down, you can see that they took a profit from prior years and turned it into a much smaller profit in 19. And that was because of the losses, of course, that they suffered or they incurred in their home segment. Well, at that point, I said, well, the growth is going to actually hurt their bottom line if it continues on this. So I wanted to look at it a little bit deeper. And so let's take a look then at their year-end calculations of profits and losses, in specific the homes division. And here again you see that $1.365 billion. And what I did then was divide that by this number you see down here, 4,313 homes sold, and wanted to bring it down into a number I can relate to, and that is what the sale, what they purchased for each home, and what the profit came through. And as you can see, if you break it down in the home segment, they sold the homes for $316,543. That's per home. And then they had a cost in that home of $304,972. I'm assuming that's the purchase price plus repairs, because I can't find repairs anywhere else in those numbers. So from those two numbers, that 49,905,000 equates to a gross profit of $11,570 per home. If we take that then down and we try to screw it down to, okay, that's the gross profit, what's the net profit? Well, the first item they show is holding costs, and if you go to item 1, you'll find that's homeowners associations, property and tax, insurance, utilities, cleaning, maintenance costs that they occurred, and that accounted to $3,646 a house. Then the selling cost, number 2, that if you'll read that, it says that includes the commissions paid to the agent to sell the house, and that's $13,720. If you divide that into the sale price of the house, that's 4.3%. So that's kind of understandable. And then the next item is interest per house. That's $4,652 or 1.5%. And again, that's understandable. They aren't holding that money for a full year. They're probably borrowing it, if they equate it to borrowing it, something at a 4.5%. But they don't hold it for a year, so it's 1 point. So that all makes sense to me. Then they go into these positive numbers of 22,500, and what that is they are depreciating the homes that they're holding in inventory, and it's a bookkeeping tax number. And so I think it's kind of throws off the reality of the situation. So rather than this return on homes after interest expense, they're showing 21,675,000. I think you've got to back out those two numbers right up there, and they actually, their loss is 45,345,000, or that equates to $10,513 per house rather than the $5,026 that they show. Okay, so looking at that, my next question to Jeff Burton, CEO of Zillow, would be, okay, Jeff, in 1 year you took your house sales from 177 to 4,313. That's a 24x growth. Let's assume you do that again this next year. As you said, it was a tumultuous year or something like that. Let's assume that you expand at a rate and do that. Well, that would mean that you would sell 105,000 homes next year, okay? And again, projecting everything forward would mean your projected loss would be $1,420,000,000 in loss. So I look at that and I say, where's he going with this? It's and my mind goes to Amazon and how they put the book people out of business. First, they did it by cutting prices and holding prices because they didn't have to pay state sales tax, and they eliminated the brick and mortar, and they eliminated the clerks, and and they changed the whole dynamic around, and they lost money for 20 years, but then they got to a point where they so controlled the market that they became able to dictate basically anything they wanted because they were the primary source. So I guess I'm thinking, they have some way to turn this loss of $10,513 per house into somehow make it a profit. And my eyes immediately go to the selling expense, that 4.3% that they're selling an agent or paying an agent. Well, what if they put that agent on salary? And what if, rather than the average agent not making a living in real estate, the 80-20 rule, what if they basically put them on a salary and said, okay, you're not going to make $10,000 or $13,000 a house, you're going to make $1,000 a house. And what if they basically eliminated the agents entirely? And then what if they also own the mortgage company and they cut the costs there? And then the other expense they have of the $4,650 is interest. Maybe they could skin it there a little. So I believe, as I have said before in videos, Zillow is out to eliminate the real estate agent. And then my mind switched back to their quarterly statement, what would it have been, for third quarter. And I did a video on it, and I'll show you with the video, where Jeff Burton said, we are going to turn the process of buying a home into a 3-click process.
And so Zillow 2.0 is about revolutionizing that transaction, and Zillow offers is our product there. We're actually buying and selling homes in 21 markets right now. It's going really well. It's grown from basically a standing start to a $1.5 billion a year run rate revenue business in about a year, which is maybe not unprecedented, but extraordinary. We dream one day of you having kind of almost a trade-in experience with your house, where you're standing in a house, a Zillow offers house that we own. You've been there 15 times. You've let yourself in with the Zillow app. You, with one click, can decide to move.
That's what the process of buying a book is. That's what the process of buying shoes on Zappos is. It's a 3-click process. There's no clerk, there's no agent, there's no intermediary involved. So I think it's pretty clear where they're going. They can't continue down this road. They can't continue to lose $10,000 on a house. That's nonsense. But it's nonsense to think anything different than what I just shared with you. Now, I still believe then, once they get to where they are selling 105,000 homes or 250,000 homes or whatever, Amazon's going to step in there and say, we want Alexa in every one of those homes. And since you, Zillow, control that market, and I mean totally control it. Now again, does this mean they're into the luxury home market? Probably not. At least not initially. There's too much money and too many problems in that industry right now. I mean, in that part of the industry. I mean, those homes, those 6-bedroom, 12-bedroom, 4-bath, 10-bath homes are going to turn into multi-generational homes. And I don't think they want to get... This is where the lion's share of the market is, down here in the $316,000 home. And that's where they're going to be. But there isn't going to be a real estate agent involved. I'd bet my book on it. And in fact, the last chapter goes into the future of the real estate industry. And this book was written in November of 2017, and I predicted this at that time. So this is where I think it's going. I think Zillow, again, I will bet on it. They're going to be bought. If it isn't by Amazon, it's by Google, it's by Apple, it's one of the big tech companies. Because again, the real plum in all of this is not the real estate commissions and not the profits on buying and selling houses. It's the data. It's the data that if I've got an Alexa or a Google or a Siri in your house, I'm pumping data out and I'm pushing it right back at you and helping you in your life. I told you in the other issue how a young man's smartwatch saved his life. This is where this is going, and this is a very minor part of it that's going to turn into a major part of it. And I want you to remember where you heard this, because within the very near future, this is going to happen. And if you're on top of it, and if you see it, you can be a player in it. But if you're a real estate agent and you're selling $250,000 to $300,000 homes, I'm sorry, you're going to be the next B. Daltons, or the next, I've even forgotten the names of the Borders, I think it was. I've forgotten the names of the bookstores that are out of our mind. They're gone. So that's my take on Zillow's quarterly report. The next thing, if you find this video helpful, give me a thumbs up, give me a like. If you're not subscribed and this helped you, subscribe, and then help me on something that I'm trying to do. I'm in a race to get to a million subscribers. I got a long way to go, but with your help through social media marketing, if you'll share this on your Facebook page, on your email list, with anybody that you think could benefit from it, I'll make my goal. And we'll put this together. Because I think there's a future in this for us. We just got to be prepared for what's going to happen. Thank you.